Good evening, everybody. Thank you all for coming. Nice crowd. First on our agenda is we're going to stand for the pledge to the flag and remain silent, standing for a moment of silence for our first responders and military personnel. Thank you. Please be seated. Okay, we're going to dispense with the reading of last month's minutes because our secretary's in Hilton Head playing golf. Lucky him. Our treasurer's report. Jerry's going to give us our treasurer's report. Yeah, you do. They want to see you.
All right. I haven't done this in a while, so I'm just acting as the treasurer. Okay, our revenues for the month were $15,790, and our expenses were $26,166. So we had a net operating loss of $10,376. So that reduced our operating funds from $95,773 to $85,397. I'll save you all the trouble of going through the details, unless you have a question. Year to date, I'm working on someone else's. It's not being shown here, but if I'm reading it correctly, it may be the year-to-date. We're down $26,768. So we're down $10,376 this month, but for the year-to-date, it's $26,768. That was part of it. That's not our normal monthly expenses, but that was a big expense. So yes, that's part of it. Any other questions?
Thank you, Jerry. We go through this every year, just so you know. Our ad revenue, our biggest ad revenue comes in the months of December and January. So those are our two big months for ad revenue. And I just want to mention, our membership chairman's also not here tonight, not doing good with officers and committee members. But at any rate, beginning of May, we mailed out 1,000 dues renewal notices in the first 5 days or the last 5 days. We've gotten 200 back in the amount of a little over $5,000. So thank you guys for sending it in. If you got a renewal notice, please send it in. We need your help and your support by paying your dues. Okay, something I've been doing is introducing people who might have an impact on this community, which is your elected officials. So we have Mark Hayes here, who's a District 4 supervisor. Mark, stand up. Dan Warren, who's on the NSCUD board. Gary Cato, who's the chairman of District 5. Jerry Ferlisi, who's also on District 5. Lisa Johnson, who's just visiting, and she's on NSCUD also in the back. And I'm the chairman of the District 4 Board of Supervisors. Okay. At the back table, we have our friends from Seniors versus Crime, One Trust, Realty Execs. We have a couple of people in the back that are running for Republican committee person, so please support them. They're passing out literature. We have our friends from Suncool, and we also have our friends from Charter Research. And while I'm on Charter Research, we did a memory screening here a couple of weeks ago and had pretty good success with Charter Research. I just want to tell you that on June 25th in this facility, they'll be doing a liver screening, which we are helping with them with, and you can call 352-441-2000 to make a reservation. there'll be something in the bulletin that comes out next week about this also. So let's help them do what they need to do. Our shredding event, which was last April 20th, I believe, was a huge success. It was probably the best one we've ever done. The new facility that New Covenant Methodist Church let us use really worked well. And we had Support Our Soldiers. Gary Cato runs that foundation. And Gary collected $3,400 in donations from the great people that came to that shredding event. So thank you. And Gary, I know you want to say something.
Those of you that don't know me, I'm Reverend Gary Cato. I've been running a veterans organization now for some 14 years, and we help our military veterans who are living in poverty or are homeless. We've had literally thousands of families we've been able to help. But one of the things that we really emphasize is the education of their children. It's the only way to really break the bands of poverty. So we started a scholarship program for military children, and we identify them coming out of the 8th grade. We pay full tuition to go to any state college, university, or technical school here in Florida in full. If they meet the qualification, they must be living in poverty, have to be a military family, be able to prove that, and so forth. And in the scholarships we've given out, we've so far given out 171 scholarships to military children to go to college. This year we have 24 applications that came in. One of them this year, because the POA has done such a marvelous job working with us, we had the shredding event, and as Cliff said, we made $3,400. It runs about $4,000 for a student. So I threw in another $600 with that, and we now have enough to sponsor a student to go to college. And his name is Hunter Massey. He is just leaving the 8th grade, and he's going into various high school. He's a 3.0 student, brilliant young man, very ambitious. He wants to open restaurants or bakeries down here. So he's going to get his bachelor's degree in business administration and then go on and get a culinary degree. He's an amazing young man, and he is now being sponsored by the POA. So thank you to the POA, your officers and your members for doing that, and the money will be used effectively in getting this young man an education. I thank you for that also.
Thank you, Gary. It's our pleasure to help you do what you do, because I know how important it is. And we've been doing this now, I think, for 4 or 5 years. And it's giving back to the community to make this a better place. That's what it's all about. I do want to say that we tentatively have our next shredding event scheduled for April 12th, 2025. Hopefully it'll come off on that date. We still have to get a place to do it, but I'm pretty sure we'll be able to do that. So we will keep you informed. If it's on that date, we'll probably start issuing tickets in January like we did last year. We had about 775 people this year. I was afraid that we might not be able to handle more cars. Don't want them on the street so that there's some kind of sheriff gets mad at me. But this place was so good that we can probably handle 1,100 without any problem. So that's what we're going to look for next year. That's going to be my goal. As you know, our meetings are video recorded. They will be downloaded to our website tomorrow. Right now, people are watching them. You go to our Facebook page, POA of the Villages, and you can watch it if you can't make it. But you can always go back and look at it to see what's going on. Okay, next is our cash raffle. And let me say before we do this, we have 3 prizes or gifts that are going to be raffled off at the end of the meeting. Our speaker has donated this bag for, I guess he said it's a pickleball bag, is that right? And One Trust in the back, who will be our speaker in November on HUD. I believe it's November. I'm doing this from memory and I'm old, sometimes I forget, but they have a couple of baskets back there, real nice ones that we're going to raffle off. So all of these tickets, these 3 that I call now, will be put back in the box, and you will still get a chance to win one of those prizes. So the first number for the cash raffle is 4005 on a red ticket. The next number is 3995. If nobody claims it, the president gets it. You got it, Jer? Okay, great. On a white ticket, boy, this is the first time we've had to go to a white ticket, 6342. Bob, you're messing me all up. Right up here in front. Wow. And then Jerry? Jerry, would you put these back in the bucket, please? Thank you. And we'll pull 3 at the end of the meeting. Okay, next on the agenda is the open forum. So please ask a question if you wish, unless it's going to be something that the speakers tonight could answer. I will attempt to answer it. If I can, we'll get you the answer. So just raise your hand, and somebody will come and let you ask the question. No questions? Wow.
Are the amenity fees going to be used to fund the $3 million remake of the dock at Lake Sumter Landing?
The dock at Lake Sumter Landing goes through POA, and that will be used by, they will be using amenity monies on that. And we really don't know what the price is yet. It's estimated at about $3 million. By the time it gets done, it could be more. Anybody else? Wow. I like this. Oh.
Just curious, you said you raised $3,000 at the shredding event?
We, SOS did. We didn't. We don't collect for that. That's
Who's
free for our
SOS?
members.
Huh?
That the shredding event is free for our paid members.
And who gets the money?
That was a donation that they made to SOS, who gave a scholarship out to a student. Anything else? Okay, we'll go on with our program. Let me tell you that next month, June, we have Lynn Hathaway, who's going to be talking about lightning, and at the end of the evening, the POA and A1 Lightning Incorporated will be giving away a lightning system to somebody whose name we draw. If you buy a raffle ticket, you'll have a chance. This is the 6th or 7th year in a row we have done this. In July, we have made a change. In July, Bradley Arnold and Craig Estep, the chairman of the Sumter County Board of County Commissioners, will be here to talk about the Sumter County budget, which is probably going to affect everybody in this room that lives in Sumter County to some degree. We'll see. They're having a workshop as we speak right now. In July, we will have a candidate night at Everglades Rec Center on July 18th for the Sumter County Commission candidates that are running. And in August, we will have a candidate night for the people that are running for district offices, district number districts, NSCOD, AAC, if there's anybody that's challenged. So far, there are 4 seats that are being challenged, 2 in District 1, 1 in District 8, and 1 in District 7. But that's going to change, I think, in the next day or two, and one of them is going to go away. So in August, at any rate, we will give those people a chance to present their case. Okay, time for our meeting. So Kevin McDonald is our speaker tonight. Kevin, and I'll let you do the introductions, and thank you for coming. Oh, there's a light there.
Can we get one more mic? Because we're going to, yeah. Well, I'll just say thank you for having us. My name's Kevin McDonald. I'm an Allstate insurance agent here in the Villages. I've been with Allstate as an agent for 35 years. I've been in the insurance business for 37 years. Carl Randall runs my agency. He's been in the insurance business for 20 years. He served as a claims adjuster. He's was recruited to be an actuary. Owned his own agency in San Antonio before moving back to Florida. Our objective isn't anything. We want to give you kind of an idea, at least from our perspective, what got us where we are, what solutions have been proposed, how those solutions are working, and then hopefully give you some kind of meaningful suggestions of things that you might be able to do to incorporate some things that might help give you some initial premium relief. I do believe through this you'll hopefully glean some information that'll help you. The thing I'll tell you is we don't make the rates. We don't determine, who cancels companies. I've had a conversation or two already tonight with somebody who's dealing with an impending, policy cancellation, and we've got to find other cover. I mean, a lot of that stuff, companies are making a lot of decisions that impact folks, and a lot of those decisions are very, very painful. Not only is it expensive, but the process is arduous. So, but I do believe, hopefully, that we'll be able to share a little bit of information that will benefit you. Our objective is to kind of tag team it. Carl has some perspective that I may not have, and I want you guys to get as good information as you can. So we're going to go through the slides, and as we do, we're going to try and, some of the slides we're going to move through very quickly. Some of the slides we're going to dig in because I believe there's some information there that'll be helpful. So with that, what I would ask, jot your questions down. We're not going to go anywhere until every question's asked. And so please, if you have questions, if we're able to answer them, quite honestly, a lot of questions, we don't represent every company. And I'm not here representing Allstate Insurance Company. I'm here as a 37-year insurance guy, and I'm here to answer what questions I can answer and try and help give you some perspective. But I don't, I'm not here speaking on behalf of Allstate or any of the other companies that we represent. So I need to make sure that we're clear with regard to that. But with that, I'm going to let Carl kind of kick us off, and then we'll go from there.
All right, thank you, Kevin. So first thing is, how did we get here? There's a lot of information out there, but a lot of things that aren't known in terms of how we got to where we are now. These are some of the changes you may or may not have actually heard about. The first thing is just something that's a little bit mind-blowing is the fact that Florida is the 9th largest property insurance market in the world. So we have over $7 trillion of risk just in one state. So that's the entire world there. If you look at it as well, which this was, when you look back on it, it's kind of out of sight, out of mind. And if you look at how many different tropical storms have impacted the state of Florida, just from 2019 to 2023, there's 28 named storms. During that time, there's actually 103 named storms. It's just these are the ones that had an impact directly on Florida. Of those 103, there were 42 hurricanes. So again, sometimes we forget that these things do impact us all the time, but when you're not in the middle of it, you don't always think about it. But that's one of the main reasons why we're seeing the rates. The other big one is the reinsurance premium increases. When a reinsurance premium goes up, then that means your premiums for your homeowners, that's going to go up as well. And we'll get into that a little bit more detail later on. The blue tarp syndrome, it was worse than Hurricane Andrew. We've all seen it around here. We've seen it throughout the state of Florida, where you see the tarps on the roof, people trying to get roofs repaired. There were plenty of legitimate claims, but plenty of them that were not a legitimate claim, should not have been covered under home insurance. Litigation issues, that ties right into that as well. A lot of these claims that were paid, it's because it went to court. And, when it goes to court, in all honesty, when you look at it, the insurance company's typically going to lose that, and the attorneys know that. And that's how a lot of these roofs got paid out that really shouldn't have been. And then you also have inadequate insurance rates. We'll go into it later on as well, but you've got a number of companies in Florida that have gone bankrupt. They no longer exist because of the claims payouts here. And you don't see that in a lot of other states, but it's because of the risk here.
Okay. Obviously, when you look at the devastation that happens when a hurricane hits, This isn't news to anybody. You don't even have to have lived in Florida very long to see the impacts. But when you look at, one storm in particular, Hurricane Ian, and you factor in the impact that had on all of us. I mean, when you think $21.4 billion in claims, that's insured losses. The total losses for that storm was $113 billion. All right, so the state of Florida absorbed a significant amount of that in infrastructure. They had bridges that were washed away. You had roadways that were completely gone. You had, government buildings and all that were impacted. Those numbers don't factor into that 21 billion. That's just insured losses. So that's homes, that's automobiles, that's businesses that had to be built back. And we're going to talk a little bit about that, but if you take into consideration that $21 billion that was spent through the insurance industry in Florida, all of that money was taxed. So when those repairs were done and they bought the shingles and they bought the 2x4s and all that, that money created additional tax revenue for the state of Florida. And that tax revenue, fortunately, the state's been very responsible about how they make that available, and we'll talk a little bit about that. But the tax that was unintended, it was created by these storms. The state's doing a good job of creating the Safe Home program and some other things, and they're using your tax dollars to create these things and not just throwing it into the budget. So I just wanted to point that out because that's a lot of money, and the additional revenue is being spent, responsibly. So.
All right, the other thing to keep in mind, we're talking primarily about homeowners insurance here, property insurance, but the other thing is it does obviously impact the autos. And when we have the storms, the picture over on the right, that's actually a lot that had, from what they said, about 40,000 cars in there that flooded out. When those cars flood out, they have to be replaced, have to be repaired. And we all know through COVID, there was a lot of issues with getting cars in the first place, but all of those end up being insurance losses, whether or not it's an individual or whether or not it's a dealership or wherever that car is, but it does have an impact on us when it comes to the auto insurance as well.
Yeah, pretty much because of the electronics. If the dash of your car is submerged in water, the car's a total loss. Sometimes it doesn't even have to get that high, but I mean, if the electronics of that car are submerged in water, it's a total. And if you factor that into some of the hurricane losses, again, Florida's a unique risk when it comes to that. Okay, everybody's heard about, we call it the blue tarp syndrome. It's interesting, when we started about 4 years ago, when we started seeing the claims come in with regard to hailstorms and different things like that, literally it started in the northernmost part. The older homes were first ones to be impacted. And then it worked its way through the villages, older homes to newer homes. And invariably, it created an awful lot. There's folks in this room, I'm quite certain, that they were unhappy with this, resolution of a claim on their roof, and they may have hired a public adjuster or an attorney. That happened a lot. And unfortunately, as a result of that, it had a pretty significant impact on all of our premiums. But I mean, in 22, and this, the Insurance Information Institute provided this, these statistics, 9% of all property claims in the United States were filed in the state of Florida. And 79% of property insurance lawsuits were filed here. And so actuarially, you can't rate for litigation. You can rate for storms. They can factor in and know how to price for storms. They can't price for the increased cost of litigation. Same thing when in 2 years' time there were 246,000 lawsuits. These aren't claims. These are lawsuits that are resulted from unsatisfactory claims. So the impact that has on the system is dramatic. So we have to enter that into the conversation, not arguing the validity of the the claim or the suit or any of that, just the impact that has on the cost of the product.
Yeah, and just looking at it in comparison, as it's indicated on the slide, California in 2021 had 3,500 litigated claims. It's a larger state than us. And again, like Kevin said, we had close to 250,000 in a 2-year period just in Florida alone. Again, a man-made crisis. To Kevin's point, actuarially, you can account for the storms, but in this case, Floridians are seeing homeowners insurance become costlier and scarcer because of the years the state has been the home of too much litigation and too much fraudulent roof replacement schemes. These two factors contributed enormously to the net underwriting losses in Florida's homeowners insurance. Cumulatively, they incurred between the 2017 and 2021. Florida homeowners pay the highest average property insurance premium in the U.S. at $42.31, which is nearly 3 times the U.S. national average of $15.44. And that's based off of some statistics from 2022. But we all know, we see the rate increases here. We are paying more than what the rest of the country's paying, and it's all accounted for based off of what we're seeing with these claims.
And I can tell you, in our book of business, the two most significant rate jumps that we've seen have been since those numbers were published, because the rates that we saw in later in 22 and the rates that we saw last year, exceeded what are captured in these numbers. So without a doubt, the litigation's had an impact. So this is basically just a quick slide to give you, in 2013, 14, and 15, relatively consistently, this is a profit, the profitability of the industry. In the state of Florida, the property and casualty industry was profitable. And you look at it and think, well, gosh, $500 million, that's an awful lot of profit. If you think about running an insurance company, and that's divided by every company that's writing business in the state of Florida, that's dividing out the profit among every company. But it was fairly consistent in those 3 years. All right, in 2016, it started going the other direction. Now, imagine trying to run any company where you're consistently 5-6 years running, not only losing money, but losing a bunch of money. And you're trying to make it up with rates and still losing money like that. So even after we've taken the rate that we did as an industry, you've had 20 companies that have either left the state or gone completely insolvent in the midst of this. So those that are still here in 2023 eked out about a break even. And so, again, we want to put the numbers out in front of you, but that's an industry statistic that's put out by the department.
And then the next slide shows these are just a handful of companies that Kevin had mentioned have gone into receivership, meaning that they basically ran out of money from paying out claims, and then the state of Florida had to take over the company. And this isn't all of them. These are just the current ones. If you go to the state's website, these are the current property insurance companies that are currently in receivership. And again, once that happens, if there's an open claim, then the client will actually have that taken over by the state of Florida, and then we all pay an assessment on our policies for that as well. So you may have seen some of these companies, some of you may have had these companies in the past, but again, they no longer exist because of those claims payouts in the state of Florida.
Okay, so when you get home, I know you're going to be so interested that you're going to want to run and pull your policy up and look at it, but in your policy it says FIGA assessment. Every single one of you have got a FIGA assessment in your most recent policy. Florida Insurance Guarantee Association is the acronym. FIGA is the acronym. That's who's paying these claims. So when every one of these companies go insolvent, there's a guarantee fund provided by every one of us, and every company pays into that fund. But when that fund runs out, they start assessing, each one of the residents, any property owner in the state of Florida. That's who's paying these claims now, because these companies are gone. They're broke. And so as a result, each person in here shares in the responsibility to make sure legitimate home claims get paid. So it's in your interest as well as the industry's interest that only legitimate claims get paid. That's correct. That's correct. He was just making a statement. Obviously, the assessment eventually goes down when all of those claims are resolved. So the assessment doesn't last forever. I don't know if any of you have been here long enough to kind of live through the Hurricane Andrew. I mean, there were significant $200-300 assessments per policy that lasted for years while the hurricane claims from Hurricane Andrew, got paid, because the state of Florida just issued bonds to get the repairs done, and they paid those bonds back by assessing all the policyholders. And it does eventually it goes down, without a doubt, but I mean, it goes down at the expense of everybody in this room.
Kevin, just one moment. I don't want to interrupt you. Please don't shout out. You need a mic if you're going to say something. This meeting is recorded, as I said before, and the people will not be able to hear it. So at the end, we will take all the questions. Thank you.
All right, so Citizens Insurance Company. Statistically, there are a few folks in here that have a homeowner's policy with Citizens. Citizens is the state-run company, and it is intentionally the company of last resort. The difference is Citizens has what is called a glide path for their rates that was established by the legislature years ago, and essentially they don't create actuarially sound rates. They've got a glide path that says they can only increase their rates a certain percentage each year. And so the reality is Citizens, in some cases, is dramatically less expensive than other options in the market. And to some degree, folks are looking at it saying, hey, it's less expensive, so I'm going to do that, as opposed to getting a regular market rate policy. You can look and see in 2017, 18, and 19, that 400,000 policies is about what Citizens feels like is the right number to, and these are meant to be properties that quite honestly can't get insurance elsewhere. 2020, that number started increasing up. And at this point, Citizens is the largest insurer of homes in the state of Florida by a large margin. If you look, there's 1.2 million policies. The second largest insurer of homes has 690,000. So the department, the CFO of Florida basically said every time Citizens writes a policy, it's a liability to the citizens of the state of Florida, because if the company has to pay out claims, all of us are going to share in the expense. And so again, it is intended to be a backstop. And they are very aggressively trying to depopulate that. So what they do with that 1.2 million policies is they use that as an incentive to encourage other companies to invest in Florida, to bring capital in Florida and write homeowners insurance. And when a company comes in, they'll seed them 20, 30, 50,000 policies, whatever their capital can support, and they'll bring they'll shift those policies from Citizens to a new company in order to depopulate the Citizens policyholders. And their intent by the end of this year, their intent is to be below 1 million policies. So they're aggressively trying to depopulate, but you need to understand, as it stands, rates and Citizens Insurance Company, they're attractive because they're less expensive than some other options.
And as Kevin mentioned, the other thing is each state, they have a company last resort. If you can't get coverage for whatever reason, if you just have a lot of claims, or in this case, Florida, you're on the coastline. But again, those companies are intended to be company of last resort, which means the rates are going to be higher there. In Florida, that's not the case, and that's why so many people have gone there due to some prior legislation. And if we look further into Citizens Property Insurance, just at some of the recent, they've had some insurance meetings where they've basically had some discussions in terms of what's going on. The CFO of Florida, Jimmy Petronas, had a bunch of different state representatives, the Office of Insurance Regulation. They all met, and one of the things that was mentioned during that time is Tim Serio. He's Citizens President and CEO. He literally said in one of the meetings, we definitely need to be smaller than we are. And if you think about it, what type of company says, hey, we need to be smaller, right? They want to grow. But in this case, they know that the state of Florida has a lot of risk by doing that and having Citizens as the largest company. They also implemented where you have to have flood insurance with Citizens. So because of the nature of the risk in Florida and seeing all the prior flood claims that have occurred in the past, they have made it as part of the legislation that if you keep Citizens, you will have to get a flood insurance policy, even if you're not in a traditional flood zone. And that is just one of the requirements. So that's trying to help out with some of the future risk. But if you look at the numbers, again, 2017, Citizens had approximately 440,000 policies. Again, 2024, 1.2 million, and by the end of 2024, they're hoping to be around 100,000, or excuse me, a million. But again, the goal is to keep it closer to about 400,000. That's where the president and CEO feels safe with keeping that company where it should be. And again, the rate adjustments are there to reduce the potential assessments, because as Kevin mentioned earlier as well, those assessments are going to go onto everybody's policies to help pay for not only the bankrupt companies, but also those losses through Citizens.
Well, and CFO Petronas even mentioned in that meeting, the bond rating for the state of Florida is negatively impacted by the number of policies that Citizens has because of that inevitable liability that exists. So as the population of the number of policies that Citizens carries goes down, Florida's bond rating goes up. Okay. Obviously, the majority of us are primarily here and concerned about the impact to homeowners insurance, but it impacts everything. When you go to Publix is paying a lot more insurance cost on that building, and they're going to pass that through to you. I've got a good friend of mine who's a commercial developer, and he's got a property in Stewart. It's an industrial property. It's 200,000 square feet. 8 years ago, the rent on that building was $5 a square foot. That's what they were charging rent. This year, the pass-throughs on that building are $5.20 a square foot. Now, pass-throughs, for those of you that don't venture into commercial real estate, pass-throughs are the cost of the property taxes on that building, the cost of the insurance, and just the cost to maintain the grass and all that kind of stuff. Pass-throughs alone, not to take into consideration. And on that particular building, the pass-throughs are $1 million. And he's trying to keep a tenant in a 200,000 square foot facility, and the cost of the insurance is that much. So it impacts everything, with regard to property, it impacts everything in the state of Florida. Any realtors in the room? Yeah. I can't. You can't list your home. We had this conversation earlier. If you got an 18, 20-year-old roof, the buyer of your home cannot insure that home. All right. So you as a seller are going to have to bear the cost to replace the roof to put your home into a condition that the buyer can actually buy the home. Unless they're paying cash and they don't care about insurance, which is pretty rare, you're going to have to put your home into a condition. And usually these days, it's the roof, it's the water heater, sometimes it's the air conditioning, but things that are potential. So it matters. It matters to you. And it's certainly, if you intend to sell your home, at some point in the future, these things are things you need to start preparing and budgeting for now. I don't know how quickly it'll come back. I got an opportunity, and I'm going to digress just a second. I was invited to attend last Friday an insurance roundtable at the Federal Reserve Bank in Jacksonville, and the chairman, CEO of the Federal Reserve Bank in Atlanta came down and wanted to have a conversation with insurance people in the north part of the state of Florida, and so many of the questions were impacting how it impacts residents, not only just the cost of the insurance, but I brought up, why is it that a manufacturer of a shingle, there's 20 years, 30 years, there's 50-year shingles available, and you pay extra when you upgrade, and so you put a nicer shingle, and then the insurance industry comes back and tells you, well, I know you paid extra for that 30-year roof, but guess what? That 30-year roof's only good for 12 or 15 years now. I don't think that's fair. I don't think that's fair at all, but that's a reality of the marketplace that we're in. And so we gave that information and a lot of other good feedback back to the Federal Reserve, in hopes that, when they're making economic policy, they'll take these things into consideration in the state of Florida. So, all right, I'm going to let Carl go.
All right. So some of the things that was mentioned earlier in terms of what the state's doing to try and help out with what has been going on for years. One of the main things that they came up with actually a number of years ago is Form 1802. It's basically called the Uniform Mitigation Verification Inspection Form, or it's a WINMIT. Some of you may have had that done on your home, but what it does is it basically will tell the insurance company via an inspector that's certified by the state exactly how your roof is put on versus everybody else's roof. Depending on the year built of the home, there's a lot of different factors that come into play, but that inspection can oftentimes save really, sometimes it's $100, sometimes it's $1,000. It can save quite a bit. The other thing that they've recently come up with, and they've actually done this in years past, but they kind of revamped the program, is the My Safe Florida Home program. Right now, it offers up to $10,000 to any Florida resident on a primary home, but just to assist in any home hardening. So if you put a new roof on, if you get new windows put in that are impact resistant, they also have a lot of tax tax benefits right now for the windows, doors, and garages. And they've just recently put another $200 million in just this past April on top of the $600 million that they put in 2022. The focus right now with that new $200 million is to help out with the seniors in the state of Florida and also with the low income, because they know that that impacts everybody here in terms of looking at the state of Florida in general. But if you guys are ever interested in it, you can go to the mysafefloridahome.com site and it'll have all the information on that. But it's good to know, like Kevin had mentioned earlier, the state is putting a lot of that revenue that's brought in by the rebuilding of homes when they are devastated. They're putting some of those tax dollars back into these programs to help out with our citizens.
All right, this doesn't benefit necessarily a lot of folks that live in the villages because most of the homes here were built after the change in the building code. But in 2001, Florida basically statewide adopted the Miami-Dade building code, and it created the Florida building code. And as a result of that, it changed the way the roofing was fastened to the trusses. It changed the fact that trusses had to be wrapped. And so everybody, if your home was built after that, it was built subject to that new building code. Folks that live in a home that was built prior to 2001, if they update that, they just replace the shingles, those, everything has to be brought up to code at that point. And, in those cases, the older homes are benefited premium-wise by upgrading. My Safe Florida Home is a way to upgrade. You may get some benefit, depending on the age of the home, but the more important part is you may get some help replacing the roof. If there's up to $10,000 available, check it out, because that may be a way to get some help in defraying the cost of the roof itself. There's a lot that went through. There were 2 special sessions in 2022, and then the spring of 2023, a lot of legislation was passed to help kind of correct a lot of what was going on that drove homeowners' prices up. I'm going to touch as much as I can, but I'm trying to be, pretty quick. Separate roof deductibles. An insurance company can actually issue a policy and offer you a separate deductible on your roof than for other related losses. There may be ways for you to contemplate that, and we're going to give you some suggestions at the end of this of what you might be able to do to save some money. But the legislation allowed that to become a possibility. Prohibitions on, if you've got somebody still knocking on your door saying, hey, I'm doing the roof next door and I noticed from across the way that your roof's destroyed and I need to help you, they're no longer allowed to knock your door and solicit. If they're doing that, tell them that they're breaking the law. The legislation passed that prevented that. Prompt pay laws. There's some teeth in this law that geared against or geared towards the insurance company. Pay or deny a claim within 60 days rather than 90 days. The insurance company can't delay a decision if they feel like it's not sufficiently damaged or the damage isn't consistent with what is covered under the policy. They have 60 days to let you know that. claim acknowledgement, so they have to acknowledge your claim within 7 days. So when you turn a claim in, and the insurance company has to, has to acknowledge that. They have to physically inspect the home within 30 days. Fee multipliers, I don't know if any of you guys have heard some of the stories, but it wasn't a claim that we were involved with, but there was a $20,000 roof claim that was settled, and the roofer got $20,000, the attorney got $600,000 because of a fee multiplier that was written into the law, that all of the legal costs and all of the appeals and all of the cost associated with creating the litigation in that, and the homeowner didn't benefit from that. The homeowner got a $20,000 roof, but the insurance company, in fact, the $620,000 that was paid out was more than the policy limits on that policy because of the caveat in the law. That was corrected with the legislation. Repealed one-way attorney fees. All right, so there was no risk. If an attorney and a builder were in cahoots together and they just wanted to throw a lawsuit in there, there was no cost to them if the lawsuit was thrown out as frivolous. So they didn't have any skin in the game. It's like, hey, we'll throw them in there, and if they throw them out, no big deal. That has changed as a result of the legislation. Limits on bad faith awards. Insurance companies were getting hammered with multipliers because it was considered bad faith because they weren't, maybe they weren't honoring the 90 days, they weren't showing up within 7 days, they weren't, there were some things that insurance companies were doing that, but the bad faith laws have been tightened in hopes of trying to kind of sniff out some of the bad actors. Assignment of benefits. This is one that in our office, we had a lady who lived on her own. Her husband passed away. They've been in the villages since 2006. She lived in Marion County. She had 3 different roofers over a period of 3 different years, knocked on her door, said, hey, we're working on your neighbor's house, and we'd like to get up and just check your roof for you. If you would, just sign this piece of paper so we can get on your roof, because we can't get on your roof without you signing this piece of paper. She signed it. They got up there, and there was more to it than that because they had her policy information. They filed a claim, and as a result, they attempted 3 different times to engage the insurance company and file a claim, to a point where we got notified when she received a non-renewal notice because the company was canceling her policy for multiple claims, even though there was 0 payout. We dug into it a little bit, and it was St. John's Insurance Company, who's no longer here, but they reversed that decision when they realized that was a roofer trying to file a claim for a customer who didn't want a claim to be filed. She just wanted to know if her roof was damaged, and she's 75, 80-year-old widow. She's not going to climb up a ladder and check on her roof, and if she does, she doesn't know what she's looking at anyway. There are people in this community that have been victimized by bad actors. The laws were changed to try and prevent that from happening. I'm not going to go into condos because it really doesn't have an impact for us here, but the eligibility to get a policy with Citizens Insurance Company. If Citizens, quote, is within 20% of any policy available in the open market, you're no longer eligible to keep your Citizens policy. And so the state is really trying to enforce that because, again, they know Citizens rates are below where they should be, but there's a statutory cap on how they can adjust the rates, but they don't want any more policies in the Citizens policy, in that policy count than they have to. So a lot of meaningful change in that legislation. Now the challenge is getting it all through the system. It takes, as we'll talk about here in a minute, it takes a little while to get the claims through the system. It takes a long time to get the litigation through the court system, and that's kind of what's working its way through.
All right, now for a little bit more, again, of the good news. The Office of Insurance Regulation in Florida has approved 8 new companies to enter the market. So obviously that's good. More competition, right? That's what we need. an environment where you see companies leaving, the big national companies that have left the state entirely or non-renew policies. That's what we've seen for the last number of years, so we definitely need more companies here. Like Kevin had mentioned, they are continuing to work on the laws, and it does take time. They were very clear on this in the sessions that they had with the CFO, that they can pass the laws, but then they got to find out what's the loophole that someone's going to figure out to try and do something again like what's been happening in the past. Then they will fix those, but that takes time as well. One of the big changes that was signed into law last year on March 23rd, Governor DeSantis signed House Bill 837. The goal of that was to decrease the frivolous lawsuits, not only on homeowners, but on auto insurance. We all see the billboards everywhere with all the attorneys. Statistically speaking, you're going to get sued in Florida if you get into an accident, plain and simple, versus any other state. With that being said, most laws go into effect on January 1st. July 1st. This one, Governor DeSantis said, as soon as I sign it, it's immediate. So the attorneys had a very short time frame to do this, but if you look at that next number right below it, the reaction from the Florida attorneys, there was 280,122 civil lawsuits filed in that same month, trying to get everything in under the old laws so that they could get paid. Some of the attorneys were very brazen about it. They literally called the insurance company attorneys and said, we're going to file everything and we're going to ask for full policy limits on every single one of these. And it bogged down the clerk of courts in all the different counties. It bogged down the insurance companies. You could imagine an adjuster coming in on a Monday and seeing 100 new claims that came out of nowhere. I mean, it's just almost like, well, if you guys are going to do this as part of the law, we're going to do this. And unfortunately, again, it will take time for those to make their way through the court system. A lot of those, nothing's going to happen to them because it wasn't a legitimate claim to begin with in the first place. But they did that to try and, again, throw everything against the wall and basically see what sticks, as they say.
All right, I'm gonna use an analogy because I think everybody's seen it, but everybody's seen the picture of a snake after he swallowed a rabbit, right? All right, well, that's our court system, and that's 280,000 claims that were dropped in a month working their way through. An awful lot of those are completely frivolous. An awful lot of those are not worth the paper they're written on. But because there's no cost to the attorney for filing it, it's like, hey, we're just going to clean out our closet. We're going to throw everything in there. We're going to force it onto the system so that the court system has to deal with it. And take this, this aggravates me because of the impact that it has on other people. All right, so take into consideration, this is at the end of COVID. All right, so the court system's already upside down, backed up from COVID. And as a result, you're throwing all this in there. They can't get them through. I serve on the board at Kids Central. All right, Kids Central is a 5th Judicial Circuit. We basically provide guidance for all the kids. It's a Department of Children and Families organization, but all the kids that are in foster care, all the kids that go through adoption in our 5-county area go through that organization. We got kids that can't get in adoptive homes because they can't get a date on the court docket. And that, it gets me emotional when I think that these guys did this intentionally just to spite, because there's a piece of legislation that's going through intended to help the people of Florida. And it's like, hey, screw you guys, and excuse my expression, but that's basically what it was. And so, it's having an impact. The reality is every insurance company has to anticipate policy limits on all those claims. All right, so if you got $300,000 limits on your home, or $500,000 or $700,000 limits on your home, guess what? Your insurance company has to put $500,000 in reserve to pay claims. All right, so that's factored into their rate filing. When they go and file a rate, they have to anticipate $500,000 claim there and all the others. And until those get thrown out of the court system, that's on the rate filing. And so hopefully what's going to happen is all that stuff starts tearing off of this. The rates are going to come, rebound, because there's an awful lot of claims that have no merit. And I'm hopeful that we'll start seeing that these, the impacts of these ridiculously high rates are going to come back. But I want you to understand the mechanics of why they had to go up as high as they did, because an insurance company's on the hook. And if they if they under-reserve a claim, they don't have the means to pay it. So they got to reserve it and then factor that into the rates. All right, so the insurance, it's an indemnity contract, okay? It's not a warranty, all right? When you get 50,000 miles on your tires, you don't go file a claim to get new tires on your car, all right? When you get 25 years on your roof, you don't want to, you don't, unless there's a legitimate claim, you don't file to let everybody else help you pay for a new roof. And that's basically, in a lot of cases, what was happening to the financial benefit of the roofers and the attorneys who were helping those roofers. Then there were a lot of folks, and I don't cast judgment on a single person who's, I don't get up on my roof. I don't know anything about roofing, so I got to trust somebody. If they get up there and they tell me I need a new roof, I'm going to trust that they're being honest, But at the end of the day, an awful lot weren't, and everybody in here is impacted by it. So, again, we just, I'll quit.
If you look at, the key features of a homeowner's policy, the main coverage that you're going to look at is the dwelling coverage. That's how much home insured for. It can be at replacement cost, which is what you want because you want to be able to replace the home, or you could choose to have it at actual cash value. You have other structures coverage, which you really don't use in the villages. It would be for sheds, things that are not attached to your home, but most policies will have that built in where you can't remove it. It's just a small portion of what's going to be covered in the base policy. You have your personal property, which also could be at replacement cost or actual cash value. So that's basically what you would take with you. If you move, it's all your furniture, your televisions, all your clothing, anything you would move from one location to another. And again, it can be at the replacement cost or actual cash value. And then you have your liability protection, and that's what's protecting you from a lawsuit. If somebody gets hurt on your property and you do get sued, that's what's going to pay out on your behalf in order to defend you. What should you make sure that the agent is including on there? You want to, if it's available, have extended replacement costs on the dwelling. What that is if your home is completely destroyed and it's something catastrophic, like if we ever do get hit by a direct hurricane and everybody's homes are destroyed, then it's going to pay an additional amount over and above what your home's insured for. So if you were insured $100,000, it may pay an additional 20% on top of it for catastrophic type purposes. So it's not going to upgrade your home, but it's going to get you back to whole because we know the cost of everything is going to go up if that were to occur and we have something catastrophic happen. The building code law ordinance coverage, that's more important on older homes because what that's going to do is it's going to pay an additional benefit if there's been any code changes on your home since it was originally built. So again, the newer the home, the less chance of that. But as a home gets older, you want to have that. So that way you will have that additional amount paid out if there have been building code changes, whether or not it's the plumbing, electric, or the roofing code change. Then you also have the ability in some cases to add coverages like sinkhole coverage, earthquake in certain states, and then wildfire depending on the location. So there are some specific risks. We all know sinkhole's a big one in Florida. So if you have the opportunity to add that on, that is something that you can look at as well on your policy.
All right. I had this conversation with a gentleman earlier, talking about hurricane insurance. 45% of what you pay goes directly from the insurance company to pay for reinsurance. Okay, there's not a single company in the state of Florida that operates without reinsurance. Everybody has to have a backstop in the event of a catastrophic loss. All right, well, the average cost of that is about 45% of what your premium is, and it is a straight pass-through. The insurance companies, a lot of times there's people in this room impacted by a non-renewal. They have received a non-renewal for their company, and most likely the reason for that is when they got their reinsurance renewal, either the amount of insurance that they could purchase went down, or the cost went up, or both, and as a result, they can only accept a fewer number of policies now. If they had 250,000 homes insured last year, but weren't able to acquire enough reinsurance, and that doesn't mean they couldn't afford it, it means they couldn't get it. And in that case, they could only insure 200,000 homes this year. All right. Well, guess what? 50,000 homeowners are out looking for insurance. Some of them are able to help, coordinate that and work with another company so there's a soft landing, so you don't have to go run out and replace your roof. But a lot of cases, if you're living in a 20-year-old home and your insurance company leaves, you're out in the marketplace trying to find a new company. All right. That's real. But then, the breakdown of the cost, again, catastrophic loss, the reinsurance pays for the hurricane losses. The 30% is essentially your lightning, your fire, your typical what you expect, to be a normal type homeowner claim, and 25% to run the company. I mean, you gotta pay the adjusters, you gotta pay the agents, you gotta pay the people, that work for the companies. All right, so the things that have a dramatic impact on our rates, everybody, inflation, there's no question. A couple of years ago when a 2x4 at Lowe's went for $100, it spiked up and it came back down, but just the cost of everything. If you hadn't priced it recently, just price what it would cost to replace the windows in your house. Things like that, and all of those things factor in, but inflation has a profound impact on the cost, that it takes. The increased, claims payouts that we've talked about, the litigation, and all that, and then again, like we said, the increase in the global availability of reinsurance, taken into consideration, within the last couple of weeks, there were over 100 indicated tornadoes in the Midwest, in like a 3 or 4 day period. All right, think about the impact that has in Houston in the last week. Those things impact the reinsurance market in the States, but then there's things that happen globally. Most of the reinsurance that companies in Florida work with isn't a domestic company. Most of that stuff comes, from overseas. It's either Lloyd's of London or it's, from Zurich or other markets, but most of our reinsurance is spread around the world. So the impact that it has on your premium, is profound.
All right, and when it comes to insurance rates, that's one thing that sometimes there's a misconception about this. Insurance companies cannot just say, we're just going to start charging $10,000 for everybody's policy, right? It is all regulated by the state of Florida. The companies have to file, so we're required by law to file the rates if they're needed. The rates must be actuarially sound based off what they call standard or state standards. The rates cannot be excessive, inadequate, or unfairly discriminatory. When the rates are inadequate, you have companies that go bankrupt, and we've seen that happen. So the companies have to charge a correct premium to be able to pay out the claim and still survive and not, again, go bankrupt. But just keep that in mind, because, again, a lot of people just assume that we can just start charging whatever we want to, and that is not the case. It is all regulated and has to be approved by the state of Florida for any rate change that you're going to see.
All right, the last couple of slides, we're down to 2, and I want to give you something that you might be able to do just to, reduce your own, your own costs. And it's there's a lot of not a lot of discrepancy, but there's usually a consumer misunderstanding about home values. There's a market value, which essentially is what you could sell your home for. The taxable value is what the property appraiser said the home's worth from a tax standpoint. And then there's a replacement value, and that's what the insurance industry, that's what you want to be, basing your homeowner's premium on. And so living in the villages, everybody in here is, you don't live in Summerfield, you don't live in Leesburg, you don't live in Ocala for a reason. Because there's a lot of things like this community center that go along with living in the villages. All right, that factors into the value of your home. Because if your home was picked up and put in Summerfield, it probably wouldn't sell for what it sells for in here. That has a value, that has a factor. When you purchase your home, if you spent $700,000 for the purchase of that home, you don't need to insure that home for $700,000, right? Because there's value in the lifestyle. There's value in the property that your home sits on. All right, so if an insurance company tells you that you can insure that they can replace that home for $550,000 when you paid $700,000 for it new, the difference is that company feels like they can fully replace your home for that value. You don't have to necessarily agree with that, but if you think about what's driving the cost of your insurance, it's what the maximum potential loss is for that insurance company. And so if you factor in the value of the lot that your home sits on, golf course lots are not, the same. And so factor that in. Factor in, the lifestyle that comes along with living in the villages. Those things can help impact. There's some other things that you can consider. Every insurance company has got a replacement estimator, so nobody does it exactly the same way, but talk to your agent, because the agent can help you understand the valuation on that replacement estimator, and there may be a way for you to kind of reduce some of your costs by reducing some of your coverage without hurting yourself.
All right, and that being said, again, things to kind of consider now. So as we wait for the reform to kind of continue to go on its path and see what happens there, here are just some of the things that you can do now for your home insurance, which the first thing is, again, talk to your agent. Ask those questions. Is it possible that your home, the dwelling coverage, is it based off of the replacement cost, or is it based off of the market value? There's no point in insuring it for more than you have to, because then you're just paying more premium really for no reason. So ask that question. You could ask about the personal property coverage, again, your belongings. Is it adequate? Do you have enough coverage? Do you have too much? In some cases, if you try to reduce it down below a certain threshold, then it will go to actual cash value, so you do not want to do that. You want to keep it at replacement cost. Some people elect to do actual cash value, but we always suggest replacement cost, so just keep that in mind. There's maybe some restrictions within the company that just doesn't allow that to happen, but it's worth asking that question. And then the deductible, does it make sense for you to increase your out-of-pocket, the amount that you're responsible for before anything's covered, in order to have some savings? In some cases, it doesn't save much. In the other cases, it can save a significant amount. And really, that's up to you, is how much risk are you willing to take on? But if you increase your deductible, it may save you enough to where it makes sense for you and your household. But ask those questions, because that can definitely be something that can help out in managing these continued increases until, again, the state kind of continues with what they're doing on that path.
Okay, thank you. I know that's way more than you wanted to know about insurance, so I get it. I know invariably there's questions, and we'll do our best. I can't promise that I can make your rates go down. I can't, but I'll do my very best to answer any questions you got.
Okay, if you raise your hand, we'll come to you. Oh boy. Okay, Jerry, you want to?
In relation to the roofing issue, a lot of these companies are advertising this spray on now that's supposed to extend the life of your roof 5 and 10 years. The insurance company's going to honor that?
I've taken that to every company that I could in hopes of, it's almost like, putting olive oil or something like that on your roof to kind of rejuvenate your shingles. None of the insurance companies that I've seen have honored, it being something that meaningfully benefits the life of the roof.
So basically, if you're going to replace your roof, don't buy 30-year shingles, buy 20. I mean, seriously, if they're not going to change it, why would you want to spend the extra money to put a 30-year roof on? Because you're not going to. The next guy that owns a home is not going to benefit, and you're not going to benefit either. I'll be dead in 20 years.
I posed that question to the Federal Reserve, CEO the other day, because it doesn't make sense if the manufacturer of the shingle is guaranteeing it for 30 years. In my opinion, the insurance industry ought to honor that, but I don't get why not. Yes, sir.
If you recently replaced your roof through a warranty issue, could the Safe Home program or whatever you refer to help offset the costs that I had to pay to replace that roof?
That's a great question, and again, I would encourage you to go to their site and ask them. Again, they've been very proactive to make sure and try and help folks be aware of it. So I wouldn't want to conjecture that, but I would certainly encourage you to look it up and see if they can help.
One thing from my understanding, though, it has to be done after you get approved for the grant. So if it's already been completed, then chances are no. But if you're getting work done in the future or you're planning on it, then that's definitely something to look at.
Okay, I wasn't sure what the relationship is between the Citizens Property Insurance and the FIGA, the Florida Insurance Guarantee Association. And then the second question is, if by law, the Citizens Property Insurance Company has to maintain policies at a certain level, which doesn't correspond to the risk associated with those policies. So essentially, we are subsidizing that risk, right? Is that correct?
That's correct. It was a legislative change To be honest, it was a political decision to make, to make Citizens rates more competitive. It wasn't a good decision, and it certainly created liability for the residents of the state of Florida. The glide path that they call it essentially is a stated, it's not a flat 10% increase, but where you've got some companies that are taking 40, 50, 60%, increases in order to get their rates actuarially sound. Citizens is in there taking their 12%, and unfortunately over a period of years, that gets them in a significantly, they're not actuarial rates. FIGA there is no relationship between Citizens and FIGA. FIGA is the Guarantee Association, not governed by or managed by anybody at Citizens. Citizens is an insurance company. FIGA is the means by which we all collectively bail out insurance companies that go broke. If you can envision FDIC, all right, FIGA is Florida's version of FDIC for the insurance companies.
I recently got my renewal, and of course it had almost doubled. So I went out and made some phone calls. The only insurance that I could get was if I would prorate my roof, which is 11 years old. Is that become a common theme now for insurance companies to do that?
11 usually isn't an issue or isn't old enough for us to have issues. Usually 15 to 18 and beyond is where we're seeing issues. But I'm going to guess Security First is the company that you're working with. Does that sound familiar?
It was three separate insurance companies that I went to see if I could reduce the costs.
Yeah.
And each one of them wanted me to insure with them as they would only prorate my roof.
Yeah.
If anything should happen.
So what I envision at some point, Florida's probably going to adopt what most companies do. If you can envision the hail belt, which we were talking about earlier, but from Texas, Oklahoma, Nebraska, through the center part of the country, they have basically a standardized program. For the first 10 years, your roof is covered, fully replaced. From years 11 to 20, it is a 10% per year depreciation. And after 20 years, you don't have a hail claim for your roof. Your roof is fully depreciated after 20 years. So to answer your question, obviously, go to the 3-tab shingle. But at that point, after 20 years, the industry categorically says your roof is no longer there. If you have a fire and it burns the house down, they'll put a new roof on it for you. But if you have hail claim or wind claim and it's just damaged the roof only, after 20 years, you don't have a claim. So. Yes.
You mentioned that most of your claims, that Florida settled 99% of the claims in the country.
Lawsuits.
The most of those liability or property and casualty?
All right, so 9% of the claims, 79% of the lawsuits. So it's all over. And it's property.
79% of the lawsuits in the country is right here?
79%, and that was in 2022, 79% of all property insurance litigation came out of this. It's property insurance. So homeowners claim where, you filed a claim and the adjuster didn't agree with you or your contractor and it went sideways and you got a lawyer involved. 79% of all litigation in the country was right here in the state of Florida.
And what encouraged that and what is being solved by the recent legislation?
Well, you had attorneys that didn't have any skin in the game. If they filed a frivolous lawsuit, there wasn't any repercussions to them financially or otherwise. There was a tremendous pot of money out there with fee multipliers and things like that were incenting bad behavior. That legislation removed some of that incentive for guys to go out there and throw it against the wall.
And one other question, the 40,000 cars that you had on the lot over there, what are you doing to discourage them to get back on the secondary market after they've been total loss?
All of us have heard of the gray market cars coming out of Texas that were, once a car's been flooded,
Right.
They are supposed to be, considered totaled. I don't know that the insurance industry is actually the one driving that, but I'm sure state of Florida and the Department of I'm not sure, the Department of Transportation, somebody's going to basically make it to where a
but-
dealer can't legitimately sell a car that's been
The
totaled.
insurance companies own those cars, so what are they doing to make them undrivable?
Insurance companies are parting those things out. You know, they'll get it to, you know.
Yeah.
Yes, sir.
Sir, there's one or two companies in the area that is, I'm going to use the term quote, that are known for questionable claims and that stuff. Is the Attorney General or anybody taking a look at this on these companies? I mean, there's one company that I'm familiar with, and I'm not going to name it. However, they have the attorneys in line and everything. Sign right here. We'll have the attorney contact you tomorrow. That type of thing. Yeah, is the AG doing anything on that?
And who, I mean, you said insurance companies?
No, a roofing company.
Oh.
I'm sorry, roofing company.
Here's what I generally encourage folks. If they've got a 352 as an area code on the door, usually you don't have problems with them. The companies that we had most problems with were from out of town or out of state. You know, so when we were having the roof litigation issues and stuff like that, you know, these guys are coming in from Texas or they're coming up from South Florida. But if they had, you know, if it's a local roofer, I can't mention a local company that I know of that was really driving a lot of litigated. Okay.
Catastrophic collapse insurance, sinkhole insurance. Why do you have to have both?
Catastrophic ground cover collapse is mandated for any admitted carrier in the state of Florida, and it's a total loss scenario. You know, so I mean, your home is damaged to a point where Sumter County, Marion County, Lake County says you can no longer safely live there, and you are. I mean, that home is condemned. That's catastrophic ground cover collapse, and every admitted carrier in the state of Florida is going to include that. Sinkhole coverage is the partial loss. And, you know, so it's a cracking in the foundation. It's obvious there has to be a hole, you know, but, and I defer to my claims, you know, expert on the distinctions, but.
Yes. So basically the way it worked, and just to kind of give you a little bit more background on it, the reason why the state created the catastrophic ground collapse law is because citizens at the time and the other insurance companies were having a lot of sinkhole claims being filed, where again there was no skin in the game, as Kevin mentioned earlier, for the attorneys or the public adjusters. They would literally door knock on that too and say, hey, looks like there's a sinkhole somewhere, you know, within a mile of your home. Let's see if you have a sinkhole. Again, all they're doing is throwing everything against the wall to see what sticks. And what was happening is then the insurance company or Citizens Property Insurance would have to pay an engineer to go out and look at the home to determine, is there a sinkhole? $5,000 to $10,000 just to have that assessment done. So the state stepped in and said, okay, we're going to make it mandatory by any company that's regulated by the state of Florida that you have to include the catastrophic ground collapse. Basically, the short version of it is, if you go back home tonight and you can visibly see that your home has fallen into a hole, if it has impacted the slab or the foundation of your property, excuse me, so it has to be sudden as well. You also have to have it where the city or the county condemns the property. That's going to be covered under the catastrophic. If it's a sinkhole that you maybe can't see necessarily, but your doors aren't shutting right, the floor's starting to buck a little bit, but it's not as apparent, or it's not visually where you can see the home's fallen in, that's where you'd want to have the sinkhole. So sinkhole coverage is basically a broader form of coverage or a better form of coverage. If you've got both, it really doesn't matter because you're going to have the coverage either way. So we always suggest getting that coverage if you can, but it's very difficult to get it in this area because of the number of sinkhole claims. So it's kind of a catch-22 there.
Well, and if you do get it, a lot of times you got a 10% deductible. So if you have a $500,000 home, you got a $50,000 deductible. So you're kind of self-insuring that risk already.
I have a couple of questions. Absolutely. My insurance company, Tower Hill, became an exchange last year, and I truly don't understand what that means. So if you could touch on that a little bit.
It's a mutual company, basically. You can share in their, you can share in their victories and you can share in their losses.
Well, they said they won't probably have any victories for a while.
The opportunity is that if they have underpriced their product and they run at a significant deficiency, they can actually assess you. So they can, if you ever, anybody run a business in here and you ever had a work comp, audit, and you come back and you go, okay, I got to pay $3,000 for last year's payroll, there's a potential in, you know, in that structure for the company to come back and ask you for more money.
Okay, my second question is, and this is somewhat anecdotal, but in the village that I live in, I walked regularly when all the roof stuff was going on, and it was every third, fourth, or fifth house was getting the roof. I didn't know any of those people, but my very next door neighbor got a $500 roof. And when I said something to her about maybe the quality was not going to be good because of these fly-by-night companies, she said, I don't care, it'll last longer than I will probably. So she didn't care, she got a $500 roof. Interestingly, her premium didn't go up the year that happened. I paid $12,000 for a new roof out of my pocket, and my insurance went up 38% that year. Why, when you have a car accident, does an adjuster come out, take a look at the accident, assess the damage? All these people, including my neighbor, never had anybody from an insurance company send an adjuster or an inspector out to see if there truly was hail damage, which seemed to be the big one in my neighborhood. Very few houses had any shingle loss because of that. But why no adjusters? Why no inspectors?
And that's a great question. So a lot of times they will send out an adjuster, but we've literally had claims where the adjuster will call us and say, hey, they've already got an attorney on it. We didn't even get a chance to go out and look at the home. So literally, claim gets filed, and before that even happens, and to your point earlier, that's exactly what a lot of these companies have done. They're in cahoots with the attorney, so their plan is, hey, we're just going to go ahead and file this with the attorney regardless of what the insurance company says. So a lot of times the company doesn't even have an opportunity to go out and look at it. So that happened quite a bit. It doesn't happen as often now because of the change with some of the laws, but you would see that occur quite often. And a lot of times they'll send an engineer out as well, especially on the hail claims. Because I can tell you, we've seen some reports, and again, neither one of us are roofers, we're not engineers, but when you see a hail claim and yet all the damage is to the roof, yet there's nothing on the metal venting on the roof, nothing on the AC unit, nothing on the lanai, that's, again, all metal. The car that was parked out front, that doesn't have any hail damage. So how in the world did the shingle have damage, yet none of the metal on the house had any damage? And we would see that constantly. And a lot of those went to the court system, and we ended up paying out on it, even though we shouldn't have because of the fact that it was not a hail claim.
It takes a half-inch hailstone to damage a shingle. Half-inch hailstone will go through your windshield. A half-inch hailstone is going to leave a mark on your gutters. It's going to leave a mark on your ridge vent. It's going to leave a mark on the hood of your car. You know, so the reality is, you know, it literally can't damage. And if you ever see a roofer coming off a roof carrying a ball-peen hammer, there's no reason for a ball-peen hammer to ever be on a roof except one, because it looks really much like hail. When you hit the roof with a ball-peen hammer, man, it looks like a hailstone.
My question is related to hurricane deductibles. Recently, some folks had mentioned that on their renewal, they went from a $1,000 deductible for hurricane. All of a sudden, now it's at 2% of the value of the house. What's going on with that?
Every insurance policy has an inflation adjustment on the dwelling value. As we talked about earlier, the cost to repair a home goes up. As a result, the valuation on your home is also on an inflation adjustment. And certain companies have thresholds where they'll allow you to buy back a deductible as long as the home's value is under $250,000 or $350,000. But written into that contract, it says once the home's value exceeds whatever threshold that company has, that it automatically goes to that 2% deductible. The state allows that so that the insurance company can stay solvent. Quite honestly, hurricane deductibles are meant to kind of mitigate the risk for the carrier, but the way that applies, and you know, a hurricane deductible, and I'm trying to remember the year that Chris and Gene and I mean, where the 04, yeah, where I had a customer in Orlando that was impacted by all 4 storms and had damage because of all 4 storms. When you satisfy a hurricane deductible, I always tell people it's like a health insurance deductible. You pay it once a season. So if you have a 2% hurricane deductible and you satisfy it in June, then the rest of the hurricane season, if we have another storm, you've already met your deductible for the year. So it is different than a lightning strike or a kitchen fire where you've got a per occurrence deductible. But most companies have some factor in there that says once the value of the dwelling exceeds a certain amount, it automatically tips into that percentage deductible.
And the other thing too, they may have refiled their policy with the state of Florida to no longer allow for those lower deductibles, again, to try and mitigate that future risk. Because it's kind of ironic too, you'd see these with some of these claims where the roofer, kind of not knowing exactly how it worked would say, oh yeah, it was the hurricane on this specific date that caused this. And then when the client finds out, oh, wait a minute, I got to come up with $7,000 versus $500, they're not going to proceed with that claim. Then it became, well, it's hail or that it's wind. It's not a hurricane because that's a higher deductible. Well, if you had $1,000 or your normal deductible, then a lot of times that would still get filed. So a lot of companies are trying to stay away from that. And 2% is pretty standard with most policies in the state of Florida.
Just a comment and a question. As a district official, I get a lot of phone calls from residents, and a lot of them came in when these roofing companies were blitzing the villages, signs all over. They were saying they came in the house, they said, I can get a brand new roof. All I have to do is pay my $1,000 deductible. And then they guarantee if your insurance company turns you down, we have at least 6 attorneys that'll guarantee we're going to get that for you. And that was the sales pitch.
Nobody gets hurt, right?
Oh, absolutely not.
It won't affect
They don't
anybody.
even care about that, and they're going to get their new roof. The second thing is we're about 81 feet above sea level here on average in the villages. The storm system here in the villages for stormwater can handle up to an inch of rain every hour up to 24 hours, which is pretty good. And there's no mention of flood insurance. Now, I've always been a believer in insurance, and I was with HUD for many, many years. The FEMA flood insurance, I've always carried that. Bottom line is, here in the villages, there's not a lot of talk about flood insurance ever. It is conceivable. It could happen someday. And the difference between backup water and flood water coming into your house. Could you talk about that just a little bit? Because there is a considerable difference.
All right, so floods is rising water, at the end of the day. In order for you to file a flood claim, there has to be 2 acres of ground covered with water. So it can't just be that the water was running off the slope of your driveway and it was fast enough to come into your garage and cause damage or whatever. It has to be 2 acres of area flooded. All right, so that's, if somebody's next to a retention area or something like that, that's the most likely. Yeah, in a lot of places, retention areas are meant to kind of spill into each other. So you usually have one retention area that goes to another, it goes to another. If something happens and that gets backed up, then it could potentially happen. But yeah, as far as flood, it's interesting because FEMA maps are based on historic flood information. The rate of growth in the villages is 2 years ahead of the FEMA mapping mechanism. All right, so if you buy a home in Finney or somewhere down there and they're moving, they've got 6 or 8 vertical feet of fill underneath your home. There is no chance your home's going to flood. But the old FEMA map that's 3 or 4 years old doesn't know that Rainy Construction put 6 feet of fill beneath your house. And so as a result, they're still showing you in a retention area or in a drainage area, and you got to buy flood insurance if you have a mortgage on your home because FEMA's maps aren't current. That's a challenge. Yeah, you don't have a choice unless you just don't want to have a mortgage. FEMA's going to force you to pay for flood insurance whether you need it or not. So, Gary. Yeah, there is. There is private market flood insurance. Or there was. It's not as available as it once was, but private flood insurance doesn't have the same, limitations of FEMA, and the companies can issue it. But usually, that's written on properties that really aren't anywhere near a flood, prone area. Yes, ma'am.
I have a 15-year-old roof, and I'm insured now for the next year. Should I be going to a roofer to get an inspection to see if I should replace my roof, or should I wait for my insurance company to send somebody out? If they do they? I don't know. Or
you're kind of right there. If you, I don't see many companies proactively going in non-renewing customers because they have a roof a certain age. We've heard of other companies doing that. We haven't seen internally companies that are individually non-renewing policies because of the age of the roof. So I don't know that by itself is necessarily going to cost you your policy. But what I will say is if a company is forced to non-renew some policies, it's amazing how all the 15 to 18-year-old homes, kind of get caught up in that. So it's never a bad idea to have some idea in your mind what it's going to cost you to replace that home. And if you ever go to sell the home or anything like that, that's going to probably be the trigger that says, yeah, I need to go ahead and get that done.
Okay, it's Kevin. Thank you guys a lot. I learned a lot. Hopefully our residents learned a lot. We really appreciate it.
Thank you.
Before you guys all run, we got a couple things to give away. So, white ticket, last four numbers, 6392. This is for one of the baskets back. Is that you, sir? Is that you? Please go back and get at the end table. I got another number. White ticket, 6356. 6356. Sir, go back to the same table. And now for Kevin's red ticket, 3999. Back table. Yeah, we got it. Right there. Thank you all for coming. We got donuts and coffee in the back. I take your word for it. Nobody else. I take your word for it.